The problem with this, also, folks, is that you have no idea if this guy's telling you the truth. Operating statement. It's basically the income statement for the apartment building. Again, you want the most recent month, and you want year to date. I like to see individual months as well. But there's a reason why they call this stuff liar statements. These guys are trying to sell their apartment building, so you think they may fudge a little bit on one side, one way or another? But again, we're going to dance. We're dancing now. We're not going to get married. We're not looking for a long-term relationship. And the third thing, one of the most important things, because let me contrast single-family houses with apartment buildings. Just about every apartment note, commercial mortgage, has a due on sale clause. Guess what? There is a due on sale jail for apartment buildings. They are enforced, aggressively enforced. You do not want to run afoul of a due on sale clause on a commercial building. You're going to come to closing with $100,000. You know, we'll just record it this way or that way or this way or that way. Don't even. You need to know about underlying financing. So,
not everybody might not know what due on sale means.
Oh.
Especially for our Australian folks here.
Due on sale means that any is a common clause for loan documents that say if the property is sold, the loan becomes due and payable immediately in full. So that means when you buy, when you go to closing, the current loan is paid off and you take on new financing. And so they want their money back if the property is sold. So what you can't do is if I've got a commercial mortgage from Bank of America on an apartment building, I can't sell my building and keep that financing in place because the bank wants to requalify the people who are buying, the new people that are buying the building. Okay? So I used to just ask for 1 and 2 rent rolls and operating statements, but now I ask for underlying financing. Because unless the bank will let you assume the note, pay it off or whatever, it's not even worth looking at stuff. I know there are a couple of buildings right now in the market that are spectacular buildings, cash flow unbelievably well, but they've got prepayment penalties that basically kill the deal. You cannot do these deals because prepayment penalties just kill it. Terms you must know. This is an eye test. Okay. Net operating income. Net operating income is the first one. Simply revenue minus operating expenses does not include financing or depreciation. Okay. Capitalization rate or cap rate is a partial measure of return on investment. It's basically the net operating income divided by the purchase price. It equates to what your return on investment would be if you paid cash for the building. What your return on investment would be if you paid cash for the building. This is a very important number. It's funny. It was important, it was not important, then it was important, and it was not important, then it's important again. Debt coverage ratio. Debt coverage ratio. This is basically a measure of how well property cash flows. It's how many times, it's your net operating income divided by the annual debt service. So how many times does your net operating income cover your debt service payments on an annual basis? They ought to be at least 1. Well, why would you buy a building with less than 1? Generally, you want to see, the credit union guy said he wanted to see about 1.3. Which actually is not bad. I think it'd be higher by now. Cash on cash return. This is just a fancy schmancy name for return on investment. Net cash flow divided by your cash investment. Net cash flow includes financing. It does not include depreciation though, because depreciation is an accounting term and depreciation is a non-cash expense. Depreciation comes in much later. Okay? Cash on cash return. Net cash flow divided by your cash investment. So you take net operating income less your cost of financing, less your financing equals net cash flow. Divided by your net, or by your cash investment basically gives you a return on investment. And then basically cash on cash return or ROI is what I use. It's the only thing that I use to evaluate my buildings. And I only do it taking the financing into consideration because financing is so hard to come by right now. And the final one used by brokers and people that don't own apartment buildings is cost per door because it's easy to understand. It's actually, I'll back up. Appraisers are starting to use it and some bankers are starting to use it. And it is a good thumbnail. I mean, if you're at $80,000 a door and everything else in your neighborhood's going for $50, your building's too expensive. So as a kind of a screen device, you might be able to use it. But I see people buying and selling buildings based on this, and I think it's just silly, personally. and then I'll find this guy. Okay, those are the 5 important terms that you must know.